The top business stories live from the Sky News City studio. The global satellite giant ViaSat opens its new international headquarters in London almost a year after taking over the UK's Inmarsat. AstraZeneca promises to raise its dividend ahead of a shareholder vote on a pay rise for its chief executive. And I'll be speaking to the restaurateur defying talk of a crisis in the nighttime economy. Good morning, this is Business Live with me, Ian King. It's almost a year since the global satellite giant ViaSat took over Britain's Inmarsat for $7.3 billion, following a competition inquiry that went on for more than 12 months. Well, today sees the opening of ViaSat's new international headquarters in London. And joining me now from the site is the company's president, Guru Garappan. Guru, very good morning to you. You're describing this as a centre of R&D and innovation. What kind of things specifically will be going on at the site?
Yeah, thanks again for having me here, and super exciting day for us as we think about ViaSat along with Inmarsat. You know, London, as we announced during the acquisition, is our international headquarters. A lot of innovation happens here as you think about our main key business segments, take maritime, aviation, and the government segment businesses. That's a core here as we think about international growth. And the new location for us as we move from our old headquarters is really focused on innovation as you think about satellite connectivity, IoT, in not just existing customer base, but really building labs as we think about future of satellite connectivity. So excited for what we're bringing in, but also really working with the teams here, thinking about scaling and execution overall as a team as we grow our international business as well.
What sort of investment has this been?
So, you know, we don't comment publicly in terms of the exact dollar amount. That being said, it really shows our commitment to the UK and London in moving to a new location where now we're innovating and putting innovation labs. Of course, we'll continue to grow the teams here as we focus on our international growth. So I think this, not just the statement, just moving to this new location and building through a lot of the innovation lab just speaks to the in terms of investment, but we're not disclosing the exact amount.
I do remember visiting the old headquarters off Old Street roundabout. How's the integration of Inmarsat going?
I would say fairly successful and on an accelerated timeline as we think about Inmarsat. And if you go back to the original deal rationale, one of the things we talk about is bringing the capacity in terms of what ViaSat brings to table and the coverage that Inmarsat brings globally, and the international presence, at least the Inmarsat teams have really good. So we've actually gone through multiple phases of integration. If you remember last year, we announced the organization where we have now single leadership team, single go-to-market team. So that's operating pretty well. We've achieved also major synergies. You know, we achieved it almost more than 2 years in advance. We announced about $100 million in savings, which was 2 years in advance, almost $20 million more than what we wanted to achieve. But that's not enough. That's not sufficient. We've actually seen a lot of revenue synergy where we are now going to customers in the UK, but more broadly other markets as well across all the three key segments: aviation, maritime, and government systems more broadly, where we've seen increased adoption to our product across both the suites. I would say integration has been going pretty well. The teams are all integrated. The systems are getting integrated as we speak. There are many more things to come in their journey, but accelerated, doing pretty well.
You did mention that cost savings target just now. I mean, you have let a few people go over the last 12 months. Does that mean that London now accounts for a proportionately higher share of the headcount of the enlarged ViaSat?
I would say, you know, we didn't, if you think about the legacy ViaSat, we didn't have this large a presence in London. Inmarsat did really bring in a fairly big team to our base. So London does count proportionally as you think about it as a very important part of the team and also a good share of our total employee base.
More broadly, Guru, talk to me about the health of the industry in general right now. There were obviously a lot of concerns over the last couple of years about there being a glut of capacity, particularly for some of the higher orbit satellites.
Sure. So I would say, if you think about the health of the industry, I don't think there's a better time to be in this industry as you think about the space ecosystem. You know, today the market, you look at the mobility market, it's about $108 $108 billion to be in 2030s. It's massive market. We've seen in our segments, you take aviation, you take maritime or the government business, we've seen quite a bit of adoption and gaining new customers. Aviation has done pretty well. We've actually competed with a lot of legacy and the new entrants in the space, and we see the continued momentum in terms of what we're delivering. So I would almost say the market's scaling pretty well, and the competition is scaling well, which is actually a good sign that there's a lot of investment going into the market, and we like that. We are seeing that adoption from customers, and you take aviation as an example. Today, we have 40 million customers on a monthly basis that are on our ecosystem on airlines, right? But that's still the beginning. You think about billions of passengers who are globally traveling, on a yearly basis. So that's a very important part of their journey as you think about the market growth across all the segments. And the second piece, I would say, the market, at least for us, when you think about ViaSat, it's not just about capacity and connectivity. We are bringing in that enterprise grade level integration and service to all these massive customers. Plus, we also bring in quite a bit on the software layer where they want to either service the customers more in an integrated way or drive better monetization. So we are bringing a lot of those capabilities, which are not just anymore about capacity only, but it's a much more bigger value chain across connectivity, engagement, and monetization.
Okay, Guru, we have to leave it there, I'm afraid. Good to talk to you this morning. Thank you very much.
Same here. Thank you.
Now, since the pandemic, Britain's nighttime economy has struggled to recover, with the cost of living pressures that followed COVID hitting visits to bars and restaurants. But one entrepreneur today places a big bet on a revival. The Mexican-Japanese restaurant chain Los Mochis will today open a 14,000 square foot site in the Broadgate Circle here in the city, and it's got a 3 a.m. licence. Well, joining me now is Marcus Seslev. He's the founder of Los Mochis. Marcus, good to see you again. How much does it cost to open this site?
Well, it's been significant. It's been our largest investment in the UK so far, over £10 million.
Wow. How long will it take you to recoup that?
On a normal business case scenario, we would assume 3.5 years. I think we'll do it significantly quicker than that. We have in all our other businesses, so we would hope to do the same here.
You are obviously fairly optimistic about the outlook for hospitality, at least in this part of the UK.
I mean, look, hospitality is a key driver to the economy. I think we're in the business of creating memories and experiences following COVID. I think hospitality has evolved or morphed from just providing food and service to entertainment. Now I think we all realize that we're all competing for time.
Obviously, the city has a fairly unique economy. Do you expect to do as much business as the weekends as you would do during weeknights?
I think it's super interesting, actually. The area we've chosen, Broadgate Circle and Liverpool Street, is probably the most connected area of London. I believe it's within 45 minutes of here. There's, I believe, 8.5 million people living within 45 minutes of here. So I think that has was a huge driver for us. I think in addition to that, the city is morphing post-COVID and becoming more of a lifestyle destination. You're seeing lots more hotels, lots more restaurants coming up. And I think as there's this huge shift, it was to work from home, and now it's coming back into work from the offices. We're pretty excited. We're really excited, to be honest with you. That's why we made such a large bet for 20 years into this area, and we believe in it super strongly.
I mean, Marcus, I've been working in and around the city for 35 years. It used to be a real job to get a drink late into the night. Did you have much of a difficulty getting this 3 a.m. licence?
Well, I mean, look, on the weekends here, there's a huge crowd that comes in from Essex and East London and Northeast, South London areas into this part of town because it's so accessible. And unlike the West End, transportation is a big driver for us. Now, getting the 3 a.m. license was definitely a challenge, but I think that our business case was an interesting presentation for the council, and I think they understand what we're trying to do. And we made a very large investment from an F&B point of view, from a hospitality point of view, into the area. So we hope that's going to pay off for us. We're totally focused on the opening.
Now, Sadiq Khan's nighttime czar has come under a bit of scrutiny in the media lately. Have you had much support from that direction?
Who?
Sadiq Khan's nighttime czar.
I know. So far we haven't heard anything. That said, the nighttime economy is definitely facing some challenges in London. And I think they need to really, if we want to compete with the best cities in the world, and London should always be at the pinnacle of that. And it's funny, if you look at the food and restaurant scene, it sort of swaps between London and New York back and forth, and who's the sort of the culinary capital of the world. I think it sits with London today, but London's facing a lot of challenges if it wants to be this late night or just this amazing destination. I think they need to work out the transportation issues, and need to work on crime. I think those are two very big areas. Coming out of COVID, some of the councils took a really aggressive and a positively aggressive approach to outdoor dining and presenting this more of an indoor-outdoor lifestyle, which London, with the temperature changing and climate change, London's perfectly fitted for it. But I think they need to tackle things like crime, antisocial behavior, and definitely transportation. We picked this area because of transportation, but I know that in other parts of London, it's such a challenge.
Yeah, Marcus, it's good to see someone taking a real big bet on the economy here. So best of luck with it all. Good to see you. Thank you
so much, and we look forward to seeing you guys all here.
You never know. Some other stories for you now. And the drug maker AstraZeneca has promised this morning to raise its annual dividend by 7% this year. The UK's biggest company said the pledge underlined its confidence in the performance and cash generation, and it had taken into account other capital allocation priorities as well as previously announced acquisitions and business development. Well, the news comes ahead of AZ's annual general meeting this afternoon, in which shareholders will vote on whether to raise pay for its chief executive, Pascal Soriot, by £1.8 million to £18.7 million, and that has divided investors. Shares of Darktrace have jumped by as much as 10% this morning after the cybersecurity company raised its sales forecasts for the third time this year. The Cambridge-based business, which has 9,400 customers worldwide, said sales during the first 3 months of the year came in at $176.1 million, up 26.5% on the same period last year. It cited both new customers and increased demand from existing ones, adding that an end to recent economic uncertainty was creating an environment in which organisations could prioritise proactive cyber defence. And the self-storage facility provider Lok'nStore has agreed to a takeover by SureGuard, Europe's largest developer, owner and operator of self-storage facilities, valuing it at £378 million. Brussels-based SureGuard, which already has more than 40 facilities across London and the southeast of England, said the acquisition would enable it to expand elsewhere in the UK. It's targeting Manchester in particular in the short term. Lok'nStore, which opened its first store in February 1995, has 43 outlets in England and Wales. It's been listed on the stock market for 24 years. And Fujitsu, the company that developed the Horizon software at the heart of the post office scandal, has been awarded a government contract just months after agreeing to suspend all bids for public contracts until the conclusion of the post office inquiry. The National Nuclear Laboratory, which is ultimately owned by the Department for Business, Energy and Industrial Strategy, awarded the contract for software support worth £155,000. It will run until 2025. Well, last night's sell-off on Wall Street following the stronger than expected US inflation data yesterday was followed by a largely downbeat session for equities in the Asia-Pacific region overnight, only Shanghai bucking the trend. Well, in Europe, stocks are also trading to the downside this morning. Here's the picture in continental Europe just now. Talking points today include Société Générale, the French lender, up 1.75% in Paris. I promise you it is high. That's something's wrong with that graphic. It's sold an equipment financing business this morning for €1.1 billion. Well, here in London, the FTSE 100 also in negative territory, albeit by not very much, off a fifth of 1%. No fewer than 8 FTSE constituents have gone ex-dividend today. In other words, they're trading for the first time without the rights to the latest payout. So you've seen quite a few big names automatically adjusting lower. They include the likes of Phoenix Group, Lloyds Banking Group, Aviva and Reckitt Benckiser. If you own any of those, don't worry about that. That's just because they've gone ex-div today. You'll note Phoenix Group at the bottom, a particularly chunky payout from them. It's one of the highest yielding stocks in the the FTSE just now. Outside the top 100, Dark Trace, mentioned them a moment ago. They're the leading mid-cap gainer, while SafeStore, what you can see on the screen just now, they're up 3%. That is on the back of the bid for Store. On the foreign exchange markets, well, the big talking point today is the Chinese yuan, which has fallen to a 5-month low against the dollar. The dollar obviously got a real pop on the back of the inflation numbers yesterday. All of the other main currency pairs that you can see on the screen, there's not a great deal of movement there, quite frankly. As for the oil price, largely unchanged this morning as the market watches for developments in the Middle East. Barrel of Brent crude currently changing hands at $90.04 a barrel. That's off a little under 0.5%. Well, with me this morning is Rachel Winter, partner, of course, at Killick & Co. Rachel, good to see you this morning.
Thank you.
AstraZeneca, quite interesting, the timing of this announcement.
Yeah, so increase to the dividend. Everyone loves the dividend, but I do think this one is quite conservative. This is a company that has had such a good decade. It's more than doubled its earnings per share in the last 5 years, and the dividend hasn't really moved. So in that context, I think this 7% increase is relatively conservative and easily affordable.
Yeah, I mean, this is a growth stock. They're investing very heavily. They've done a ton of acquisitions. I mean, it's probably right that they're a little conservative, isn't it?
Absolutely, and I think in the past, many UK companies have been guilty of paying dividends that are too high, and that's really harmed their growth over the longer term. So I think it's right that AstraZeneca has been quite careful.
What do you think about Pascal Soriot's pay? I mean, there was a big story on the front of the FT the other day. Some investors actually think he's underpaid.
Yeah, I mean, it's a difficult one to talk about when so many people are really struggling with the cost of living crisis, but you can't deny he's done incredible things with that company. He's really turned it around over the last decade, and it's now the second biggest company in the FTSE, so I think he should be well paid.
Yeah, OK, vote of confidence there. Another takeover in London. I mean, there's one a day at the moment. We had Gresham Technologies earlier in the week, and today it's Store.
Yeah, but I think many of the ones we've seen in the past have been companies that have really been down on their luck with very low share prices. This is a company that is doing really well. The shares were already trading on quite a high valuation, so I think it is a very successful company. What's interesting here, I think, is that the bid has not come in at a very big premium. The premium was about 16% to yesterday's closing price. And in fact, today the shares are trading above the bid price. And I think that suggests that maybe some investors are expecting a counter bid from another company. So quite exciting, I think.
It is. I mean, this is quite a fragmented market. I mean, I mentioned, obviously, SafeStore there. You've got Big Yellow Group out there as well. There are a fair few of these sort of players around.
There are, but it's a very popular sector as well, because I think, particularly with hybrid working, people are moving around a bit more, and that has created more of a need for self-storage. So I can see why investors see it as attractive.
Now, another big gainer today is Dark Trace. Only good news coming out of this company at the moment.
Yeah, I mean, on the face of it, the numbers look really good. They have raised their guidance because of unexpectedly high revenues over the last quarter. But you just have to look at the share price since the IPO in 2021 to see how confused investors seem to be about this company. I mean, it IPO'd at 250, it went up to 1,000, it went down below 200, now it's around about 450. So it's really all over the place. It's quite a roller coaster.
Yeah, do you think that's because of the Mike Lynch shareholding in it? I mean, it's a big lump of shares he and his family own.
Yeah, unfortunately, I think it is the association with him. I think he doesn't have any control over the company at the moment, but I think just the fact that his name is associated, and at the moment he is on trial for fraud, I think that probably is weighing on the share price, rightly or wrongly.
Rather unfairly, some would say there.
Perhaps some would say that, yes.
What about, it's not a listed company, but Heathrow's caught your eye today.
Yeah, nice to look at what's happening in the travel sector. You might think that with airfares having gone up so much and with this unrest in the Middle East that demand for travel might have dropped, but that's certainly not the case at Heathrow. They did say that Good Friday was their best day ever in terms of passenger numbers. And also I thought the cargo volumes were quite interesting, up 9.4% since last year.
Wow.
And that's possibly a side effect of the shipping problems in the Red Sea that are causing more people to use air cargo instead.
Wow, very interesting barometer indeed. Rachel, we have to leave it there, I'm afraid. Good to see you today. Thank you.
Thank you.
Still to come here on Business Live, I'll be speaking to the Chief Executive of the payments company Mimo about its mission to simplify finances for small businesses. Don't go away.
I'm Stuart Ramsey, and I'm Sky's chief correspondent. We take you to the heart of stories that shape our world.
There's always more to the news than a headline. We want to discover, to delve a little deeper, to find out what's really going on. Explanation, analysis, the people at the heart of every story. I'm Neil Patterson, and this is the Sky News Daily Podcast. Alex Crawford joining us now from Ukraine.
Their personal possessions are all scattered around the place.
Our economics and data editor, Ed Conway, try and make sense of the big numbers for us.
Things can change incredibly quickly, and that's what they have done.
So, by the end, we'll hopefully all understand what's going on in the world just that little better. Available wherever you get your podcasts.
They've pushed the protesters further back here. There's around 200 or 300 still remaining.
I'm Dan Whitehead and I'm Sky News' West of England correspondent.
This van goes onto the streets of Plymouth 7 days a week, 365 days a year.
These facilities at the moment are a lifesaver. It's all we've got.
From fishing communities to bustling cities, we spend every day reporting from across the region.
I'm going to have nowhere to live for about 3 or 4 months.
They are coming from the epicentre of what is now a global health pandemic. We were seeing and speaking to young women who were selling themselves right on the high street. Before Brexit, these oysters were being exported to the EU, but the trade stopped overnight. What's your feeling about the future then?
Blake, you'll be finished, I don't know.
Traveling is not just about the destination. It's also about how you get there. Fly Emirates, fly better. Fly Emirates, fly better.
Welcome back. Now, over recent years, numerous software products have been launched to help small businesses with various aspects of financial management, including invoicing, running payroll and making international payments. We're hoping to simplify that is the platform MIMO, stands for Money In, Money Out, which seeks to bring together these various services. Today, it announced it's raised £15.5 million to support its launch. And joining me in the studio is Henrik Grimm. He's co-founder and chief executive. Henrik, good to see you this morning. What gave you the idea for this?
You too. Thanks so much for having me, first of all, and for talking about this. So the idea came from, essentially, we're 3 co-founders, and all of us spent our careers in the financial technology ecosystem. And we've seen how small businesses struggled with payments and cash flow management throughout our careers. But the real trigger was my wife, actually, running the payments and sort of accounting for her dad's construction business, and sort of seeing her spending time on the couch. I realized there was something more that needed to be done.
How long has it taken you to get up and running?
Good question. So relatively quickly, honestly, we're right now 15 months in full time. And so we've quickly put together a product and been able to show some traction with customers. I think that really comes from a senior team.
Obviously, with startups over the last couple of years, there's been more of an emphasis on hitting profitability rather than growth. How quickly do you think you can achieve that?
That's a great question. From our perspective, right now, we're obviously just funded with some venture capital to be able to build out the product. And so our core focus right now is to ensure that we build out a product that serves these small businesses' problems, and we can prove that there's an opportunity to distribute this. In terms of profitability, the core business model is actually quite profitable because we combine a set of different revenue streams. And so if we would like to, we can probably in the next 2-3 years.
OK. I mean, you're up against some fairly big players. I mean, the likes of Sage and Xero. You're obviously not intimidated by that.
No, I think many of these companies like Sage and Xero are actually also core partners of ours. So we don't replace a Sage or Xero. We sit on top of them, actually. So we're very much into the partnership model of working with larger players in the space.
So is it fair to call you in that sense an aggregator?
Yeah, I think you can say so. And a bundler, if you may. Right. I think the last few years there's been to your point, lots of point solutions being developed in this space. And we believe that there's now an opportunity and a need to start simplifying the end user experience for companies.
Would you worry about someone like Google trying to offer a service like this?
Well, it's a typical question that you would get. Why wouldn't Google do this? Honestly, the short answer is no. They have lots of other things to focus on, and in particular, they got a very profitable ad business, and I don't know all the 10,000 things that they're doing over there.
Yeah.
But this payments and cash flow management for SMBs in the UK doesn't seem to be top of the list.
Now, you've got quite a track record in startups. How do you judge the health of the sector right now, and particularly in tech?
Yeah, I think, looking at the space, obviously there's been a slowdown and a correction. I think rightly so. I think we had a few years where there have been overinvestments, a little bit too positive vibes from investors, and we've definitely had a correction there. However, the sort of core underlying trends are still very positive. There's a lot of technology adoption that still needs to happen, and we're obviously a core player in that space.
Is there still funding out there for the right business? I mean, you've obviously announced a raise today.
Yeah, look, I think there is definitely a lot of appetite from investors. I think obviously big problems and where you can prove that a sort of product actually solves that problem and where there's a solid business model in the bottom, I think that's definitely still fundable.
But do you get the sense that tech startups are having to sort of fight harder for funding now? Is it taking longer to raise money?
I think, yes, in general, that's a fair assessment. I think we do see that there's higher requirements from investors compared to 2 years ago, but I think it is for the better. I think it also sets a better statement and sort of a better pressure on us entrepreneurs to really show what a real business would look like for the future.
But do you think that will change as interest rates start to come down around the world?
Well, look, I think obviously interest rates impact the sort of general risk appetite in the economy. And so I do think that we've sort of gone through probably the worst parts of it. But I think we're quite some way away from the sort of pretty frothy markets that we saw in 2021.
Yeah, and very briefly, obviously, Sweden is a great place for tech startups. Klarna, who we've had on this programme many times before. Is it still pretty vibrant just now?
Absolutely. Super vibrant economy and startup scene there. I think obviously we've benefited from the fact that some of these larger players like Klarna are starting to really mature, and there's a lot of talent now that wants to get out of those companies and join an earlier sort of startup like us. And so we really benefit from that.
It sounds great fun. Henrik, best of luck. Good to see you this morning. Thank you.
Thanks, Ian.
That's it from now. I'll be back at 4:30 with our afternoon edition. Hope very much to see you then. Coming up next, it's Kamali Melbourne. Stay tuned. See you later. Cheerio.